to talk commodities. Phil, good to have you back. The recent spike in rates has investors expressing some concerns. It seems closely tied to energy prices on the rise as well.
Well, crude oil prices, unbelievable breakout here. I was digging into like some of the numbers and everything with crude oil, and we currently have for the EIA, we've got 420 million barrels versus 452 million barrels, the 5-year average. So we're about 72 million barrels is what the year drawdown is. But what I was looking at was going back, like what was the tightest that we've ever been? And it was 2004, we were at 254 million barrels. So we have twice as much supply as what we had back then. But back then, crude oil prices, they were at about the same level. And we ended up going on a 4-year run, and we went up to 140 bucks a barrel in 2008. So, this could be setting up for a multi-year bull market.
Coming off the pandemic lows, we saw around 650, and we're looking at that move you mentioned up to 147.27, the highs that we saw back in the summer of 2008, and then, well, ultimately the subsequent decline that we saw all the way back down to $30. Let's talk about what's behind the bid in energies. Prices at the pump are on the rise. I mean, we heard a lot of talk about how this is going to be transitory headed into the hurricane, but ultimately it seems like they've been kind of lasting a little bit longer than initially thought. Is this something that we should be factoring in as more of a factor in the coming months and weeks? I mean, they don't seem to be going away anytime soon here. It's across the board as well. Heating oil, natural gas, we're talking energies in general.
Scarcity shortages is the key, and you've got shortages in natural gas, liquefied nat gas, coal, heating oil. That's really the problem is shortages. They don't have the capacity. They didn't build it. Weren't anticipating it snap back this quickly. You've got all your rig counts are much lower. You look at natural gas rig count where Baker Hughes is like 99. We should be double that like we were in 2018. So we just do not have the supply capacity coming back online anytime soon. And about that sell-off in crude oil, that multi-year one, that was really the emergence of that shale oil production. So we've got to get oil production in the U.S. back online. We're only at about 11.5 million barrels per day. We need to get back up to 13.5, 14.5, 15. But I don't know under this current administration if they'll allow that to happen.
Doesn't seem to be. What should we be looking for headed into the winter heating months? I mean, these trends leading into. Oftentimes, though, we do see kind of prices in the commodities overshoot. We talk about this. It doesn't seem to have been the case at this point. We've really yet to reject these upper levels. This comes with a very strong U.S. dollar. But, I mean, this is seasonal as well, I'd imagine.
Yeah, the seasonality kind of got thrown out the window, especially this year. And I think it was because of the fact that so many people were unemployed, not going back to work. They were able to, travel more. So it really crushed that normal seasonal chart. Normally we peak when, on oil and gas when the driving season actually starts. And then we continue to sell off all summer. We ramp up into Labor Day. And then we'll peak as they build the excess supply, we don't have that seasonal trend. So I would kind of throw those out the window at the moment. Really, it's got to be about, can they solve a lot of these supply chain logistical issues? And, it's many other commodities, too, that are facing this.
Took a little while for gasoline RBOB futures to join in, but they're starting to participate up to the 240 level. We can see that right now, currently up by about 1.5%. Phil, any other commodities you're watching this week? I've been keeping an eye on a little bit of a bid coming back into play in copper, finding support around the $4 level recently, but starting to exhibit some enthusiasm to the upside, participating along the lines of what we've seen in energies. Grains ultimately have been on the move as well. What else are you dialed in on here?
Yeah, the copper's really range bound. The ones that we're really keeping an eye on, sugar, it could break out to the upside right here, tied into the ethanol demand, tied into the energy story. Look at oats. Look at wheat, the more the Kansas City and the Minneapolis wheat. Those have broken out to the upside as well. They got a USDA report coming out this week that won't really affect wheat, more corn and beans. But there's a lot of commodities that are turning up right now. Cattle looks like it's breaking out to the upside. The regular metals now are not doing that well. Platinum's a really good one. That broke out to the upside too. I think that they're trying to position themselves for car demand at the start of the year with 2022 models. So they're starting to bid up some of that, hoping that those supply chain issues are resolved. Like I said, a lot of commodities out there. I think it's a great time to be involved with commodities.
Platinum we're looking at, and the move up here up to 1041. No rejection of that high. I just want to cycle through a couple of the charts that you were speaking to. You mentioned the consolidation that we're forming here. You can see that pretty well defined in copper. I mentioned the $4 support level right now, but the bulls want to see this thing up above 480. And then here's another one. Wheat, you mentioned how the WASI report this week should be watched, but more so corn and beans. Those two have been struggling relative to the bid we've seen in wheat recently. They came off a little bit last week, it looks like. But lastly, here is that sugar move you mentioned. Cotton, another one that we've been watching. How about the volatility we saw in gold lastly, Phil? A spike on Friday, but it seemed somewhat short-lived, and certainly it's been struggling to get back above that 1,800 level. The bulls have been, well, disappointed as of recent. With rates on the rise, you would think we'd see some movement there amidst all these inflation concerns, but there's a lot of factors at play here, I guess.
Man, you took the words right out of my mouth. How disappointing was that on Friday? It ran right up to, I'm not a moving average guy, but if you put up a 50-day moving average on the gold chart, you'll see it went right to that number and it just stopped. There's also a downward trend from that peak, that all-time peak. You could connect it through like the September high. You know, it hits like 1915, keeps coming down. So that'll act as another resistance too. So it's got two really big resistance levels it's got to chew through. I thought with all this stagflation, you know, misses on the jobs number, inflation rising, that's generally the best environment for gold. But those yields are just killing gold. And I don't know how much higher yields can go. You know, the banks really have this, big banks have this agenda to push yields up. So I think that they're really behind it. 162 to 164, we thought top end, you know, on the range. So if we could get some kind of sell-off in yields, you could see gold go back up. Two other markets to watch. Watch the Australian dollar and the Canadian dollar because they're highly correlated towards commodities. They're starting to turn up. That might put a little bit of pressure on the U.S. dollar next. You might get another bump up in the commodity cycle.
Certainly something to watch here. The Canadian dollar has really struggled recently, but a strong jobs report on Friday also providing a little bit of support. And yes, if we continue to see crude prices, at theory, at some point, you'd expect to see the Canadian participate as well. Phil, before I let you get out of here, you brought up currencies, so I'm going to finish with that thought. The yen struggling and some weakness there. Are you keeping an eye on that? Ultimately, that's supportive of the U.S. dollar. You mentioned the Canadian headwinds, but this has been helping lift the greenback.
The yen and the Swiss franc, those are your two safety currencies. So people don't think they need safety, so they're selling those off. That's helped supporting the dollar. I just hope due to the weightings, if you can get a turnaround the euro currency, then you have something. Then the dollar index is going to come under some pressure. But I think that a lot of these currencies, another thing is that I really believe that these central banks globally are trying to like keep their currencies in check at the moment.